you stop working today, how long will your savings last? That's even if you have savings. Now, if the answer scares you, calm down, because this video might just be what you need to change your life. Now, there are two sources of income, and the first one is what most people rely on. They trade their time, their energy, or their skills for money. And if they fail to show up, the money stops. This is known as active income. On the other hand, if you truly want to become wealthy, you want to earn without having to work every day. And even while you're sleeping, you're relaxing, or you're doing other things that matters to you, then you must go from working for money to making money work for you. And this is what we call passive income. With passive income, you invest once and the money keeps coming in. And to do this very effectively, you must understand the three major categories of passive income based on risk levels. Firstly, we have the high risk passive income. Now, these are investments that can bring in good money. But one thing about them is that they come with big risks. In this type of investment, the value can swing automatically. It can be up today and down tomorrow. And you can identify this type of high-risk investment by volatility and high returns. So by volatility, it means that the investments are highly unstable. For example, today you might get huge profits and you think that you have arrived, only for you to wake up tomorrow to the shocking news of market crash. Now, by high returns, it means that any investment that promises more than 25% returns on the investment per annum can be considered as a high-risk investment. And a typical example of high-risk investment includes Forex trading, cryptocurrency, and Ponzi schemes. However, not all high-risk investments are Ponzi schemes. Forex and cryptocurrency are not Ponzi schemes. They are legitimate forms of investment, but they come with high risk. Now, so should you invest in high-risk investments? I would say yes, but only with a portion of your money. It is true that high-risk investment can multiply your wealth, but you must treat them like gambling, okay? Invest only what you can afford to lose. Don't cry on social media if it crashes. Once you make a profit, pull it out. Don't assume it always works. The higher the risk, the higher the return, and the higher the probability of losing everything. Secondly, we have the mid-risk passive income. Now, mid-risk investment offers moderate returns, typically between 10% to 25% annually. Now, these are more stable than high-risk investment, but they still carry some level of uncertainty. And to identify a mid-risk investment, you need to check the type of assets the company you are considering to invest in is actually putting their money into. Also, you need to look for companies with real tangible assets and a solid business model. And for example, at Just Point Nigeria Limited, we offer a cashback investment model where investors invest their funds with us and we use that fund to expand our real estate assets. And in return, we offer some of the investors 20% returns on investments and bigger investors more than 25% returns on investment. Now, this is a strategic and more sustainable approach to wealth building. You are not gambling. You are investing in real appreciating assets with more reliable returns. Thirdly, we have the low-risk passive income. Now, low-risk investments are the safest, but they usually yield the smallest returns. This type of investment are ideal for people who want predictable income with minimal risk. An example will include mutual funds, treasury bills, and agriculture. And that is where Morayo Farm and Residence comes in. You see, with agriculture, when handled by experts, can bring in regular income, but it must be done properly. And Morayo Farm and Residence is a good example of a low-risk passive income because it combines farming with real estate. And this is how it works. You invest in farmland that is being managed by professionals, and you earn steady income from farm activities on the farmland. At the same time, you own a piece of real estate that also grows in value. Now, to build sustainable wealth, you must be able to spread your risk. And here's what you can do. You can divide your money into three parts. Put one part in high-risk investments, put another in mid-risk investment, and the final part into low-risk investment. Try not to put all your eggs in one basket. So by diversifying, you get to enjoy the potentials of big wins of high-risk investments, the stability of mid-risk investment, and the safety of low-risk investment. But remember, the biggest cause of poverty is not the lack of money. It is the inability to manage the money you already have. So passive income, when properly structured and diversified, gives you the power to grow your wealth even while you're sleeping. And this is how to build a long-term financial security and freedom. Now, if you have found value so far in this video and you would like to join dozens of others who have positioned themselves strategically to earn annually from Morayo Farm and Residence, then send us a message right away and one of our experts is going to reach out to you to provide you more information.